Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But we'll just wait by for the markets to open. It's just about a few seconds, and it does look like it will be a gap up opening. But what happens after that is going to be more interesting. Maybe the market will just lick its wounds for the moment. Okay, it's not a 1% gain. It's 99, 97 points, 95 points higher, 92. Okay, 95 points higher on the Nifty. So 10,600 not scaled. 350 up on the Sensex and now scaled down to 300 up on the Sensex, 34,500. So it's about a 0.9 gain, not quite a 1% gain. The midcaps have actually shot up with a 1.8% gain. The Nifty Bank is the most sober of all the indices with only 3/4 of a percentage point gain, and that was to be expected because it is heading into a rather big event. The big gainers are actually the metal stocks, so it's actually Manisha who got the call right. Vedanta is up 2.4. HPBP also higher with crude nowhere near that $70 mark even after the mild rise overnight. SBI is not doing too badly, about 2% higher. Adani Ports is about 2% higher. Dr. Reddy's, UPL, Aurobindo. So actually pharmacy stocks are not doing too badly. But of course that doesn't hold for Lupin. That's where the pain is. So not doing too well or in the red, NTPC, Lupin, HUL, Power Grid, and surprise, surprise, even HDFC Bank. So that selling is not stopping in the HDFC Bank counter, which is a bit of a nasty jar. And now actually the Nifty has given up strength. It's still higher, 0.7 higher. But as our experts were pointing out that the rally could be sold into, it's actually now 74 higher on the Nifty, 275 on the Sensex.
Oh yes, and Lupin, some more pressure there, right? After the 6% cut yesterday, Lupin is down another 2.5%. That's 8.5% knocked off there, and the management commentary that price erosion, etc., is a big concern. That's not going down well at all. In the broader markets, though, Lata, the midcap index is looking better than the frontliners, up 1.5%. The market breadth is good, 9:1 in favor of the advances. In terms of individual stocks, it's KC International that is one of the stocks of the moment. It is up almost about 4% right now, reacting to its good numbers. Dish TV is also on the upside, although there was some disappointment in the ARPU. Dish TV is up about 1.5%. REC, Mr. Tulsian was saying not so bad, so REC up almost 1%. Tata Chemicals reacting to numbers up almost about 1% or so. JP Infra has been in focus, reports suggesting that Adani and JSW Energy may submit the bids very soon to buy JP Infra. So JP Infra is up almost about 5% right now. And Thermax, let's take a look at that one because Thermax numbers, the street was not too happy with it. I mean, it was a mixed bag this time around. The margins have been lower than expectations, but well, the mood has improved in the market, so perhaps that's something that the street likes. So up 3% there. On the downside though, Vakrangi once again is under pressure, down almost about 5%.
Okay, so that's how the markets have opened, not able to hold on to the highs, but it's not giving up too much either. Well, Sudarshan, any trade, index or stocks?
Well, this is actually, it's a little confusing. As you said, 10,600 is our benchmark. If the Nifty crosses that level, I think that will be a sign of strength and a buying opportunity comes. The other side is also there. If 10,600 is not crossed for the next 1 hour, I think a short sell will open up.
Oh, okay. So that throws a very different light altogether, and it's now the gain in the Sensex is actually down now to just about 240 points. So 0.7 up on that index. Mitesh, your first trade on the indices?
So, Nata, these are not the levels I would trade the indices. As I said, 10,650 is where I would want to short. But stock specific wise, I have 2 shorts and 1 long. Ashok Leyland is something which is now showing signs of continuation, so I would take that long trade. While on the shorting side, I think Shree Cement is coming to the range where it can be short with a 250 point kind of stop loss. And Grasim as well, I think looks like a good shot around the 1090 mark.
Okay, well, one more stock that's surging now is Escorts. It's hit a new high today. It's resumed its uptrend with quite a bit of ferocity. In fact, now Escorts is up almost 3%, and it's now become almost a 1,000 rupee stock and market cap of almost 12,000 crores. So it's entered into the big league for sure. Some of these stocks out of F&O ban like Walkhart, India Cements are also looking pretty good. But just one final word word, Prakash, from your end on escorts. At this 920 level, does it still beckon a buy?
In fact, it was showing some very good signs day for yesterday. Market was coming down, but escort was holding out. I think it's heading to levels closer to 940, 950. So it's a matter of time it's going there. It's a good momentum pull out here.
Okay. Is there a trade in the stock which was the darling before the market corrected so violently? Jubilant Food, Sudarshan?
No, that trade has gone.
Okay.
I don't think Jubilant Foods is a buying opportunity now. In fact, the trade is in stocks like Apollo Hospitals, which is doing rather well, and even HDFC, if the markets are stable on the long side.
Okay, and no, actually I was going to ask you about the HDFC twins. One would have thought that they would be leading the market's up move. Neither of them are actually, but is there a trade in, you would prefer to trade HDFC rather than the bank?
There is a trade. If the Nifty stabilizes, then there is a buying opportunity in HDFC, the housing company. Actually, the banks at some point will become a short sell if the Nifty doesn't cross 600 then.
Oh, right.
Okay.
Okay.
Gentlemen, no, thank you for joining us. Sanity has prevailed, at least for now, in the market. So the Sensex up about 240 points, the Nifty up 80 odd points. Let's see how the rest of the day progresses. Let's invite our market master for the day now, Andrew Holland, the CEO of Avendus Capital Alternate Strategies, joins in. Andrew, hi, good morning. We were just speaking to Jonathan Garner a while back, and he indicated that market falls don't end like this. There's generally a large outflow before which a trough can be called. Would you agree that there's still some time to go on the downside?
Well, you know what's interesting about this fall is that, you know, no other asset classes really reacted. I mean, actually gold fell. Usually you get a kind of flight to safety. Bond yields didn't fall that much. Gold prices fell. Metal prices kind of held up pretty well. So it's kind of unusual for that to happen when you have that kind of turmoil in the market. And with the VIX still very elevated in the US, and bond yields actually virtually where they were before all of this happened at you know, 2.78. You know, we might revisit this again. I'm not sure that you know, it's all been flushed out of the system yet. So, you know, I think it's going to be the volatility is going to remain, I'm afraid. That's, you know, in terms of whether we're going to see further falls, we could well do, because I'm not sure that the risk that we've seen taken off in one asset is really reflected elsewhere. So with bond yields moving higher again overnight, then, you know, we're back to where we were, really.
Oh, yes, we are. 2.78 again. Andrew, good morning, and thank you very much for joining us. Volatility will return, but in all that ferocity, after all, that dreaded ETN product is out of the way. We understand it's getting wound up by February 20th.
So, you know, I think there's a few things, Lata, which I think are important. Is one, obviously after our budget and long-term capital gains tax, you know, that free ride for the markets are over now. And I think the second thing that, you know, the bull market in complacency, you know, has been really hit very hard. And I think, you know, as we kind of go through that in the next week or so, as people look at the different asset classes they can now look at, and bonds become an asset class against equities. There could be quite a bit of switching around. So I said I'm not sure that it's over yet, but I'm not trying to be overly bearish here, because I'm not. You know, we've been expecting this kind of problem in the bond yields for some time now, and finally it's happened. But I don't think that the risk across asset classes have really been reflected yet.
Yeah, okay, in India itself, the monetary policy today could hike, though that is the least possibility, but they could indicate hawkishness. So do you think in India bonds genuinely become, you know, at least an optional asset class where some money would move?
Oh, most definitely. I think that's what we'll be seeing. You know, if you can fix in, you know, 7.5%, 8%, you know, over the next few years, why not? And your return expectations, hopefully now for markets, will be a lot less than it was, say, in the middle of January. Therefore, you do get a competing asset class that you didn't have before, and that, you know, there's no alternative is something that, you know, there are now alternatives. Yes. So I think there's going to be a little bit of you know, moving around of assets in the next few weeks the asset allocators look. I mean, what I think will probably happen is that everyone will say large caps is the best place to be, and you know the kind of significant falls you've seen in the mid and small caps, which I don't think is over yet, will continue.
Okay, so you know, if you had to just summarize it for us, do you get a sense that this is only an interruption of this large bull market, or could this be the start of a bear phase?
No, I'm not thinking we're in a bear phase. I think this is a healthy correction from the excesses that we're seeing. I mean, even if you take the falls that we've seen today, you know, in the last few days, and not even the recovery, you know, the US market was still up 30% since President Trump came in, and our markets are still up 20% over the past year. So, you know, it's a healthy correction, which I think we needed. But, you know, it's at least highlighted that there is risk, and maybe that complacency in the markets will go away now.
Okay. You know, therefore, you wouldn't advise investors to buy right away. You think markets could smart under the wounds and still give you more attractive levels?
You know, that could be the possibility, Lata. But, you know, I think when you see these kind of sharp falls and the same elements still being there, if bond yields were a lot lower, I'd be a lot more happier. Or the VIX was, you know, under 20, I'd be a lot happier. But it's not. So, you know, I think just let the dust settle for a few more days.
Okay.
And I think, you know, if markets do fall, it just gives you the better entry points.
So what looks like a good entry point now? Is it the financials? Is it the rural stocks? Because we have definitely seen some buying over the last few days.
You know, so the way I look at it is this, is that, you know, if you mentioned at the very beginning about, you know, that funds would be looking to overseas funds would be looking to sell, and we're seeing that through ETFs as well in more passive ways. So the opportunities actually land up in the large caps, because that's where the liquidity is. So, you know, I think you're going to find, you know, quite a number of, I mean, obviously we like the private banks, we like selective autos, we like selective metals. You know, so all the favourites, you know, will become cheaper. But there'll be other sectors which, you know, have been overextended as well, you know, in terms of optimism, where those share prices come back to a range which you'd be more happier. So some of the sectors that you weren't so gung-ho about in terms of the valuations will give you a good opportunity again. So I think it's a good way to kind of kind of allocate around your portfolio as well.
Okay, you know, I don't know if you're still in that long short fund, but in a hypothetical long short fund, do you think it'll be better to have a larger percentage of shorts? What should the ideal ratio be?
There's never an ideal ratio, Lata. I mean, you have to, in our long short fund, you know, we have to try and manage the risk, and you can do that through a number of ways. Obviously, in rising markets, you don't want to have too much high beta, and in markets that we've had, you've always want a little bit more high beta as well. So you just have to manage the risks as we go along. You know, fortunately for us, one of our policies is not to have you know, huge positions around big events, and that was the budget, so that really helped us. And obviously we had reasonable hedges to going into the downfall. So now it's really a matter of where we see the you know, some value. We saw it a little bit yesterday at the very beginning of the market, but again, you know, we're back to the kind of levels where we're not feeling that. We're not feeling overly bullish, but we're not, you know, again, probably more neutral. But we see still risk to the downside because, you know, things haven't changed really.
You know, you said in your buy list or in your fond of list, autos, private banks, and metals. I didn't hear you say infotech. Would you reconsider IT stocks?
Also, IT has been, you know, as you know, Lata, we've been very negative in IT, but a bit earlier this year, sorry, last year, should I say, and the latter part of last year, we became more neutral because the damage had been done. We were, you know, very pleasantly surprised with the commentary from the IT companies, so we're more neutral in our stance. But it's a great place to hide. But as I said, you know, even when the markets were falling, you know, the dollar remained weak, so you didn't see that, you know, kind of extra weakness in the rupee, which you would normally expect when you have big falls in markets.
Okay, well, we'll have to leave it at that. Thank you so much for stopping by, Andrew, and giving us your view. A bit cautious there on the markets. Of course, he has been for
Actually,
a while.
most people have been.
Yeah, and he has
today
been
morning.
for a while, Andrew Holland. So let's move on and talk about some numbers. Then Thermax posted a mixed set of earnings this quarter. Revenue growth was better than expectations, but margins disappointed. MS Unikrishnan, the MD of Thermax, joins us now to talk about that. Mr. Unikrishnan, if you can just start off by telling us what the order inflow is looking like. Have things picked up on the ground at all? Are we seeing, nascent signs of a capex cycle recovery?
The line is getting cut.
We can hear you, Mr. Unikrishnan.
Sonia,
Go ahead.
yeah, there is some problem with the line, so get that organized. In any case, I hope you're able to hear me.
Yes.
Sonia, it is not a mixed quarter. It's a good quarter for us. Because in the most difficult circumstances post the GST implementation, we have been able to lift our revenues by a 14% as Thermax group level. I agree with you that the profit expectation from the market could have been a little higher. We had difficulties with two of our overseas subsidiaries, of which one of them will certainly go back to really positive and compensate for the negative of the current quarter. One may still continue, is already anticipated. Equally important for us to convey to you is that our order intake in the current quarter also continued to be very positive. And at this point of time, for the first 9 months of the current year, the entire order intake has gone up by a 47%, which is even beyond the expectation that all of us had. This has lifted our order carry forward, that is order book, by a 27%. That's a positive news, because this is going to be helping us to get into the next year with a better carry forward, means a very good year for the FY19. So that's the overall thing to comment about. And inquiry pipeline is also improving. So we are seeing some amount of an improvement across the globe, including in India.
Okay, well, actually, Mr. Unikrishnan, that's exactly what I wanted to ask you. Revenue is actually very good, up 15%, double digits, and order inflow. Is this a maintainable run rate? What are the vibes you are getting from the market, the inquiry market?
The consumption-oriented sectors have started really placing orders without any worry about the forward election or the economy across the sectors, all sectors in the country. Even in the medium-sized projects, we've seen a traction in chemicals industry. We are going to be seeing some traction in the fertilizer industry. We have picked fairly large number of orders from the refinery sector in the current quarter letter for the Bharat 6 quality improvement program of the refineries. We have inquiries already received for 2 of the fresh refinery expansion programs. So that way, selectively in the larger project segment, I am seeing an improvement. And added to this is positive news coming from North America and Europe together is giving a kind of investment climate improvement across the globe. Despite the crude oil prices going up, I don't think the developing countries are unduly worried about. Even with all the political instability, we are receiving inquiries from the Middle Eastern sector also. So the negatives that we were worried about in the last quarters looks like are tapering off, and we should look forward to something better in the coming year. That's the overall take, Lata.
Just stay on, Mr. Unikrishnan, just stay on. I want to ask you about margins as well. But before that, let's head back to the Auto Expo. Ron is in conversation with the management of TVS Motor.
Really not able to predict at this point of time. Okay. But we are sure that this is something which is likely to happen. India is progressing pretty well.
Okay. Now you've also shown now the GTR ethanol over here. I think Mr. Gadkari will be very happy because he's one person who's been talking a lot about the viability of ethanol. And you were telling me just now that this is a concept, but this could hit the markets. Just throw some more light.
I think this can be available for the market launch. This is one of the finest bikes we have, and definitely it will do well.
Okay. So when do we see it? Have you decided on the timeline? Because I'm sure a lot of things will have to be in place before you do this.
We have to work out the other requirements in the market.
Okay.
But product-wise, we are ready.
Okay, let's talk about your N-Torque, which you've just recently, launched 125cc. We've seen your overall market share in the scooter segment is what now about 16%, 16.5% up from 14% last year. So is there more headroom to grow now with this new offering that you have?
Entork should be somewhere.
It goes somewhere. Let's walk there and we can talk. Yes.
Entork is, I think it is positioned for the Gen Z.
Right.
And it is a very young, it's focused on youngsters, not only in India, globally, and it has got so many features.
Okay.
And it is one of that kind which will definitely delight the young customers.
It looks like a good product, and but the pricing has come in slightly. The base price is slightly below 59,000. One thought, since you have such a strong incumbent in this category, the pricing would have been more aggressive. How do you look at that?
I think pricing is only one element. I think what is more important, according to us, is the product. Mm-hmm. And this product has got 125 3-valve engine, very stylish, and it will definitely connect with the youngster. There is a Smart Connect first time in this category, and first time in India in scooters, and we are looking at something like 200,000 in the first year.
200,000 in the first year. Because I remember I heard you at the press conference, you said that you are seeing a bit of a premiumization of the market, and that's...
Okay, that's Mr. Radhakrishnan. He said the word young many times. That's because young and aspirational, those are the two buzzwords for TVS Motor in their new product line. Ever since Sudarshan Venu has taken over as the MD of the company from his father, Venu Srinivasan, he's really focusing on making this a brand for the new generation. But let's get back to a conversation with Mr. M.S. Unikrishnan, the MD of Thermax. Mr. Unikrishnan, you know, while the revenues have been very good, the reason we were a bit worried is because the margin pressure has creeped in. This time your margins were not only lower than estimated, they were also lower than last quarter. I'm just trying to understand whether the top line growth is coming at the cost of some amount of margins.
In capital goods industry, it is a quarter can have a setback on account of certain specific orders having cost overruns. It is no indication of a generic nature. My expectation is by the end of the year, we should be able to catch back. Next quarter, you could bounce back to the same levels that we were in. Though I need to be admitting, there is a cost pressure overall on account of the fact that the commodity prices, especially the steel prices, have risen by almost 40% the last 1 year. And the ability of all of us in the market to pass it on to the customers, it has come down on account of the fact that it's not a seller's market at this point of time, it's a buyer's market. So they got options available. So any input cost increase cannot be passed on in the same proportion. So there is a margin pressure, but not to an extent which should become worrisome for us or anyone in the market.
All right. Thank you very much, Mr. Unikrishnan, for spending time with us. Important to note the positives that you have put on the table, that consumer companies have started giving orders on capex without worrying about elections and other events. But that bonhomie is not spread to other sectors. That's an important takeaway. We take a break on that note, but coming up, there are lots of results reactions lined up for you. Immediately after the break,